Hello and welcome back to Explain the Charts. Today is January 6th, 2025, and we're taking a look at EURUSD. First, let's discuss the recent news and headlines, then we'll dive into the chart data. Recent news from economies.com reports that the euro rose on Friday, recovering from 26-month lows against the US dollar due to active short covering. This suggests a potential shift in market sentiment from bearish to neutral or even slightly bullish. However, the Eurozone's economic data is mixed. The services PMI showed unexpected growth, but the manufacturing PMI stayed unchanged at 45.2, indicating a continuing recession. News sources like FX Street are still offering bearish predictions, citing the downward pressure near the 1.0300 level as a primary concern. Let's see what the charts reveal. Here's the daily chart for EURUSD. We can observe a recent price decline from approximately 1.10 to around 1.03. This is a significant drop, which aligns with the recent bearish sentiment reported by several financial news outlets. Let's zoom in on a specific period, say from October 11th, 2024 to October 24th, 2024, to get a clearer picture of a period of considerable volatility and downward pressure. As you can see in the selected period, there is a noticeable downtrend, with multiple lower highs and lower lows. This indicates significant selling pressure and a prevailing bearish trend. Observe how the price struggles to break above the resistance around 1.06 and consistently finds support near the 1.05 level in multiple testing phases. The volume on the candles indicates increased participation and interest in this downward movement. Now, let's switch to the 1-hour chart to analyze the shorter-term price action. On the 1-hour chart, we will be looking at the same period as before, from October 11th, 2024 to October 24th, 2024. The hourly chart shows more detailed fluctuations, confirming the bearish trend observed on the daily chart. The 1.06 resistance holds strong, while short-term support fluctuates around 1.05. Note the frequent price reversals and short-term rallies within the downtrend, suggesting that some buyers are still present in the market. These short-term rallies are likely fueled by speculative short covering before the price resumes its decline. Let's take a look at the 15-minute chart to identify the precise price levels and possible entry points. We'll again focus on the period from October 11th, 2024 to October 24th, 2024. This higher frequency of data reveals the detailed dynamics. The 15-minute chart illustrates the very short-term fluctuations and the various support and resistance areas within the larger downtrend. Traders can use these levels as potential entry points for scalping or short-term trades. Notice that while there were temporary rallies, the overall trend remained bearish. This indicates a strong bearish force at play. To summarize, the EURUSD pair, based on both news and chart analysis, presents a bearish short-term outlook. The 1.06 level serves as a significant resistance. A strong push above that level might signal a shift in trend, but it's unlikely in the short term. The 1.05 level acts as support. Breaking below that level would strongly reinforce the bearish sentiment and trigger further declines. The 1.0300 level mentioned in the news could be a strong psychological support, which, in case of reaching it, might cause the price to bounce back. In the long term, the overall situation depends on the economic fundamentals in the Eurozone and the US. Positive Eurozone economic data and a weakening US dollar could trigger a bullish reversal. Keep an eye on the next Eurozone PMIs and any changes in the US interest rate expectations. These crucial indicators will offer insight into potential market movements. Remember, this is just an analysis and the market can be unpredictable. Always manage your risk.